Why nil returns can trigger a KRA audit. Many business owners believe that filing nil returns is harmless, especially during slow months. Some even think it protects them from scrutiny. The truth is, repeatedly filing nil returns while your business is active can actually increase your audit risk. Nil returns are not a shortcut to compliance. They can become a red flag. You may be filing nil returns while your business is still operating, your bank account is receiving deposits, you are getting M-Pesa payments, you are issuing invoices, you are paying suppliers or rent, you buy land and vehicles, you are a director in companies. If financial activity exists, but your tax return shows zero income, that inconsistency can attract attention from tax authorities. When your tax return declares zero income, but your financial footprint shows transactions, it creates a mismatch. Tax compliance today is data-driven. Authorities do not rely only on what you declare. They cross-check available financial information. If your declared figures do not reflect your real activity, your profile may be flagged for review. Example of a recent KRA message. Dear John Doe, our records indicate that while you filed a nil income tax return for 2024, you earned income in 2025 as evidenced by your eTIMS transmissions. Consequently, your pre-populated 2025 income tax return is ready for filing. Please log into iTax to file your return and pay any tax due. This confirms that KRA is comparing nil returns with eTIMS data. Nil return filling is not yet active until 31st March 2026. Error message is, please note you can file the 2025 nil return for this obligation after 31st March 2026. The Kenya Revenue Authority uses third-party data matching systems to compare your returns with external records. They may review bank transaction, eTIMS, withholding certificates, VAT filings for suppliers, import or customs records, NTSA data, KPLC meters. If your filings do not align, further action may follow. They are not wrong in taxing all deposits. Burden of proof is on taxpayer. If discrepancies are detected, you may receive a compliance check notice, an additional tax assessment, a formal demand notice, accruing penalties and interest. Once an assessment is issued, interests begin accumulating immediately. Ignoring the notice can escalate the matter further, sometimes leading to enforcement measures. Nil returns are appropriate only when there was genuinely no business activity, no income was earned, no transactions occurred. The business was completely dormant. If there was even minimal income, it should be declared accurately. Filing nil to buy time may create greater exposure later. If business is slow, declare the actual income earned. Keep proper books. Reconcile monthly. Don't file nil. To buy time, short-term relief can cause long-term problems. If business is slow, declare the actual income earned, even if it is small. Maintain proper records, reconcile your bank statements monthly, and ensure your tax filings reflect reality. Compliance is not just about submitting returns. It is about submitting accurate returns supported by documentation. Lastly, accurate reporting protects your business. Assumptions